Let's also get in a voice from Peter Mcguire, who's market strategist at FS Securities, and he joins us on the show with his strategies on the space as well. Peter, hi, welcome. Good to see you. How do you look at the meltdown in precious metals post-Fed ending QE program, and where do you see now support coming in for the prices in gold and silver?
Well, we had such a huge move over the last few days, and with gold now sitting at that 1150 sort of range, I think there's probably the potential to push down a little bit further from here, possibly oversold. You may see a little bit of a bounce, but one thing for sure, over the next, I'd say 4 to 6 weeks, you'll see a lot of volatility leading into Christmas. So they're a very, very good market to trade, and that rolling across, of course, to silver and the other precious metals. Overall, I think there's a lot of uncertainty as far as, large currency fluctuations. They'll continue, and that will also impact into the precious metal market.
So, Peter, would you advise buying these precious metals for a long-term holding, or do you think that also is ruled out, perhaps?
Well, I think at the moment, it's a volatile time. You may be a good point in time when you look back in a couple of years. Was it good buying at this time, or is there further downside? Are you going to see 1,040? So I think that at the present time, certainly it's good buying, dependent upon what currency you're buying in. If you're buying in Japanese yen, it's probably not too bad. Also the euro. If you're buying in US dollars, it may be a little bit more, well, it's not a bad price either, but there just seems to be a lot of currency manipulation or fluctuation at the moment, and it's not a bad time to be in, but I think you'll go higher over the longer term.
Peter, you mentioned about the dollar index and would want to know more about that. It has been in favor on the back of strength in economic data, end of the monthly bond buying program as well. So what's your sense now coming in for that?
Well, I think that the strength will continue over the next, 6 to 12 months. I don't necessarily think you're going to see a sell-off of the US dollar. There's talk that they're going to raise rates sometime in 15. You've got bond buying now big time out of Japan. I think that'll be mirror image across to Europe. So as far as those economies are concerned, they're not growing at the level of the US economy, anywhere near it. And the powerhouse of the US is certainly resurging. Energy prices and all of that will be a bonus. So I'm sure that the way the US dollar is at the moment, it's stronger and stronger for longer.
Stronger for longer indeed, and that really has been how the dollar index has been behaving. But Peter, last question to you, and what's your view now on the crude oil prices, because they have been falling for last 2 months also. How would you look at the prices in next 1 to 3 years?
I think long term, I wouldn't be surprised at range of $65 to $75, unless you see some dramatic geopolitical concerns. But there's an abundance of oil out of there. We're looking at, from a demand side, you're still around that 90 million barrels a day. There just seems to be a lot of competition. Libya's back online. A lot of the Mid-East is, I'm not saying has settled itself down, it's far from it, but as far as export numbers and so on, the whole market at the moment, I think, is just awash with oil, and you're going to see a softer price side over that next number of years.
Fair upon that, Peter. We will let you go at that. Thank you so much for joining us with your sense on all of those global commodities. And with that, let's go for a break. When we come back,